Steve, let's talk about the month of July in the closed-end fund market. It seems like another month of risk on for broad asset classes. S&P was up about 3.5%. Intermediate bond strategies were up. Credit was up. Did that translate into the closed-end fund market at all?
Certainly. Closed-end funds on average were up about 2.5% for the month, and that brings the year-to-date number to a little over 13%. And
Wow.
so again, closed-end funds are certainly benefiting from a combination of discount narrowing and very strong NAV performance.
Steve, you've talked about performance, and how about discounts? Obviously, with the price performance, did NAV performance follow in lockstep, or did discounts narrow again?
Discounts certainly narrowed again. The average discount narrowed almost 100 basis points, which brings us to about a 3.9% discount, which sounds certainly very narrow. Again, we've mentioned this a number of times. There are a lot of funds trading at significant premiums that skew the average. It's still our view that you can find asset class exposure quite easily at discounts anywhere from maybe 7 to 11% on the bond side. And on the equity side, active management remains out of favor, and closed-end equity funds are still trading at 10 to 15% discounts.
You have mentioned activism a couple times in the last few videos as something that has been on the rise in the earlier parts of 2016. As closed-end fund performance has been very good this year, and as discounts have narrowed, is activism something that's still prevalent or on the rise, or have you seen that dissipate to some degree as tighter discounts have turned the focus to other parts of the market?
I mean, there's still 100 funds. I'm going to just throw out a number. I mean, there's still probably 100 funds that are, wider than 8%. And so, you look at that and then you think about how many funds are wider than 12%. I mean, the number is still not insignificant. And so there's plenty of activist opportunities. And then the funds that people bought a lot wider, you think about an activist accumulating a position, really, maybe they started in 2014 or 15, their average discount was 12 or 14% buying into it. Well, yeah, maybe the fund's performance has been really good since then. The discount's narrowed to 9, but that investor now owns 15% of the stock, and it's going to be hard to get out of that without a liquidity event. And
Right.
So I think a lot of the seeds have already been planted, and realization events need to occur in order to allow the fund to move on. And so I think you're going to see a lot of tender offers to settle proxy battles, or maybe even avoid the proxy battles that are inevitable. But again, do I think that capital gets redeployed in the space? I mean, it's not our capital, so I don't know how those investors move on from here. But I look at the opportunities out there, and fixed income funds have narrowed a lot, but equity funds could not be more out of favor. I mean, you have general equity funds trading at 16% discounts, and that's a pretty easy opportunity to hedge out if you're an activist, and I think that's probably going to be attractive. I'd like to see the closed-end fund sponsors be more proactive and try to narrow the discounts themselves, but I think activism is a healthy way of keeping discounts in a fairly tolerable range. And so if activists are the catalyst to narrow the equity discounts, certainly we'd enjoy that narrowing as well.
Steve, thanks for your comments, and we'll see you next month.
My pleasure. Thank you.